Today is Thursday, June 9th. It is National Donald Duck Day. Happy birthday, Donald. Yesterday I wrote about commodities and how the commodities rally is broadening out. Agricultural is starting to really perk up. And the ETF I have up here is the Agribusiness ETF. So of course stocks that are involved in agriculture and agribusiness. You can see we have a nice breakout here up through resistance after a move through the moving averages and the 50 days above the 200-day. The whole deal. On balance volume, not great, but not bad. A little bit of increase, pickup relative to the S&P 500 here. Again, not great, but this is still something. All right, I want to go over a few food stocks today. Some of them you'd expect to do well if commodities go up, and others you might expect to do not so well since it's an input into their business. Let's just run down a list, see what we got here, and you can make your own decision whether you like this sector or not. I think it's really starting to do a relative performance lead here, even though the chart itself doesn't quite show it down below. Archer's Daniels Midland, giant food processor, the quote-unquote golden cross over here. It's a nice rally, could be a little bit overbought here for a pullback. On balance volumes, just super, looks great here. Just moving down the list real fast. ConAgra. Now look at this up here. Let me see if I can get this out of the way just so you can see what's going on up there. You can see it's a slight breakout. Move that line back up there. So it's a slight breakout through this triangle pattern. I'm sorry, rectangle pattern. Look at the on-balance volume, straight up to new highs. So this is definitely something that on the breakout, if this is confirmed, of course the stock market's a little weak this morning, but if this is confirmed, then this would be something that could run, how many points could that be? A handful of points for sure. It's just measuring the height of that pattern. General Mills. Now here grain prices are going up. Yeah, this stock looks pretty good. On balance volume, not too bad. It's still above the 50-day average. I'd wait for a breakout through this triangle pattern here. You can see the triangle pattern here. I wait for a breakout before really taking any action on that one. Hershey. Cocoa prices also starting to move up a little bit. Of course, I'd wait for a breakout here as well. And, you could draw your own line here. Why this one? Well, if you take a look back, follow the cursor, you can see this is where the gap is as well. So this is a pretty good resistance. It's really got to go through there, and then it'll be a pretty good bet. Kellogg, another grain user, cereal maker. On balance volume is not too bad. Price chart is not great. So this one, I think the jury is still out on this one. Kraft Heinz. Breakout, test, resumption of the rally. Indicators are not great. I don't think these are great. So I might avoid this one, even though it's tested its breakout successfully. McCormick. Same look as we saw earlier. Wait for that triangle to break out, but look at that on-balance volume. That's nice. Smuckers. Let's draw a line. Now, it's not a perfect line. Where do you draw these lines? Is it at that high? I wouldn't draw it at that high over here. Would you draw it a little bit lower? Again, this is kind of subjective and up to your own experience. In my experience, this would be the place to put it. So we do have a breakout. On balance volume improving. Price relative, well, possibly improving. But the trend is up. Cisco, the food stock Cisco. Nice rising trend. Kind of jumpy though. Possibly a hold. I don't know if I jump on this thing as a fresh trade. Hormel. Now this is kind of a meat producer or meat products producer. You can see that's heading the wrong way. That's clearly a breakdown. And same with Tyson. More into chicken than beef, but still the meat producer is not doing well. And why is that? Is it because input prices, the grains and things like that are going up? That's for other people to decide. But just looking at the charts, these two are not going the right way. So there you have it. I think that agribusiness is doing well. Commodities in general have broadened out. And these are stocks that deal with these commodities firsthand. And I think a lot of them look pretty decent. A lot of them have good dividends too. So check them out and take it from there.